based on what we've discussed so far, the next question is this. In the end, what does the market value the most? Is it revenue, is it profit, or is it the future?
Isn't it revenue? It's important whether things are selling properly, right?
Yeah, that is truly important. But that alone isn't enough. Revenue is also judged by its growth rate. Last year was 20%, this year is plus 15%. Revenue itself is increasing. Isn't the growth slowing down a bit?
Talking about the angle again.
Right, revenue is also a speed game. Next is profit.
I get this one. Being in the red is bad, right?
Basically, yes. That understanding is correct. But there are exceptions.
Being in the red is okay?
There are cases where it's okay. For example, if revenue is growing at a tremendous speed, and they are investing everything now for the future. They are in the red now, but it looks like they can recoup it all at once later.
I see. Even if it's red, it's forgiven if there's a meaning.
However, if they are in the red and sales growth is also slowing down...
That's pretty tough?
Yeah, honestly, that's quite tough. And the last one is the future.
The future.
The word that comes up here is guidance.
Guidance. What's that?
It's an official future forecast issued by the company itself. Next quarter's sales will be around this much. Profit is likely to be in this range. It's a declaration of specific numbers like that.
You say your own future score.
That's right. How much % will sales grow next quarter? How much will the profit margin improve? How big do you intend to make this business?
That's incredibly specific.
Yeah, not dreams or atmosphere, but a promise of numbers. Yeah.
Then earnings reports. They are checking answers against guidance for sales and profits too.
Yeah, that understanding is fine. Earnings reports are a place where past great announcements and inspections of future promises are done at the same time.
There's no room for excuses, is there?
Yeah, honestly, almost none.
By the way, guidance is issued by the company itself, right?
Yeah, that's right.
Then, can't they just exaggerate a little? It's talking about the future anyway, so if they say we'll grow insanely next term, won't the stock price go up?
That idea comes up a lot, but it's the one thing you must never do.
Is it that bad?
Yeah, really bad. The reason is, guidance is not just a prediction. From the market's perspective, guidance is a promise.
A promise?
Yeah, if you exaggerate and miss even once, we can't trust this company.
Ah, the boy who cried wolf.
Right? And moreover, Buddha might forgive 3 times, but the market forgives only once.
One strike and you're out?
You can basically think so. Once you are seen as a company that exaggerates, from then on, everything is viewed with suspicion.
Then conversely, can't you say something super weak and then exceed it later? And go see, it was better than expected.
That also gets you scolded.
Why?
Isn't this company underestimating its own growth? Aren't they being defensive when they could actually grow more?
Scolded if too bullish, scolded if too bearish.
Yeah, that's how it is. So what a CEO has to do is to hit just the right future with just the right numbers.
That sounds like declaring a goal to lose XX kilos in 3 months, knowing it's right at the limit, and if you can't achieve it, being told, I can't trust you anymore. Isn't it the same as that?
That's a pretty close analogy. And further, if you say it was impossible this time even once, from the next time, this person is just talk, right? That's how you'll be seen.
Harsh.
Yeah, it's a world of valuation, not daily life. And doing that 4 times a year, every 3 months.
The CEO's mental health won't last, will it?
Honestly, there are many who don't last. So, MegaTech earnings look like a talk about numbers, but the essence is a test of trust.
But still, if you put out revenue, profit, and guidance properly, still having the stock price crash because of just one word, what does that mean?
Yeah, you'd really wonder about that. Earnings don't end just by releasing numbers. What always comes after is the earnings call.
Earnings call. Isn't it just explaining the numbers?
If it were only that, it would still be easy. But in reality, analysts bombard them with questions.
What kind of questions?
For example, like this. For this product, haven't most people who want it already bought it?
Ah, is it sold out? Kind of thing.
Right. In other words, they are asking, isn't it becoming hard to increase sales any further? One more, won't competition become much tougher from now on?
Hard to answer.
And then, for now, we are viewing it cautiously.
What does that mean?
Yeah, that's the biggest point. Viewing it cautiously is a convenient phrase in daily life. But in the financial market, it gets translated like this. I can't say clearly right now. So we have no choice but to wait and see.
In short, they aren't answering.
Right? It sounds like they are avoiding the answer. If they can't say it clearly, maybe there isn't a good outlook, maybe there is bad information? Or do management themselves not grasp the situation?
Ideally, it gets filled in with the bad side.
Yeah, the market doesn't fill in the blanks kindly. As long as they are putting money in, they factor in the worst case first.
And at that moment,
right, it's judged as then the risk is high, and the stock price moves.
Then conversely, what if they speak bullishly? Like it's totally fine.
Maybe this person doesn't see the problem?
It's a minefield either way.
That's right. It's not about being bad at talking or personality. It's a structure where any choice of words can lead to a deduction.
I'm starting to understand why one word causes a crash.
Yeah, the earnings call is a test with no correct answer.
Hearing all this, if it's MegaTech, aren't they forgiven a little bit?
Actually, they crash normally.
Even with that scale.
Yeah. First, I'll talk about the sense of scale. For example, Microsoft, the sales for just 3 months are about $81.3 billion.
In 3 months, that's a country.
And profit. Net profit is about $30.9 billion. Nearly 40% of sales is profit.
Isn't that profit margin too insane?
And the price of the whole company. Market capitalization, roughly $3.2 trillion.
The size sense is already broken.
But, the market doesn't value them just because they are big. What they look at is, will they grow properly next time too?
The angle story again.
Right. For example, the cloud business, Azure. The growth rate this time was 39%, 40% the previous quarter. Adjusting for currency effects, it's 38%.
It's growing insanely.
It is growing, but the market looks at it like this. The previous quarter was 40%. In other words, the angle of growth slackened just a little bit.
Because of that little bit?
With that little bit, are they close to the peak? Are they going to slow down from here? And at the same time, expenses are increasing with AI investment. So the numbers are strong, but the future is heavy. That judgment was made, and after earnings, the stock price dropped around 10%.
10% at this scale is
Value worth hundreds of billions of dollars moves all at once.
But that's because it's Microsoft, right?
You noticed a good point. Then next, a more blatant example, Meta. The earnings at this time actually were normally profitable, about $10.3 billion profit in a quarter.
They are making money properly.
Yeah, but what was disliked was the future. Next quarter, sales growth might slow down considerably. We don't know if metaverse investment can be recouped. It was seen that way. Result, stock price crashed 26% in one day. The company value was about $250 billion. Vanished in one day.
Even if profitable, if the future is doubted, it's over.
Not over, but the evaluation changes in an instant. What the market is watching is not did they make money now, but can they keep growing at the same speed ahead?
Far from clearing the game of life. It's a test for life.
Yeah, and the highest difficulty in the world.
Hearing all this, honestly, who would participate in such a harsh world by choice?
Yeah, it's really normal to think that. But money keeps gathering in the financial market despite that.
Why? It's a bloodbath. Isn't horse racing or lottery fine?
Haha, I understand the feeling. But there is a decisive difference. If you do nothing, the value of money decreases.
Decreases?
Yeah, inflation. For example, suppose prices rise by 3% a year. Then, in about 24 years, the value of money is halved.
Even though I didn't use it.
Right? Just keeping it in the bank, it actually decreases.
Then.
So, that's why people head to the financial market. To not let it decrease. If possible, to increase it even a little.
Feels like going to a battlefield to protect.
That sense is pretty close. And one more important thing, the financial market is not a gambling venue. The essence is a device that keeps comparing. Right now at this moment, which one inside here is the best? Company A, Company B, government bonds, gold, lining them all up and evaluating them relatively.
I see, it's not an absolute evaluation.
Right? So cheering or dislikes is almost irrelevant. Even if it was good until yesterday, today it goes down.
The not Oshikatsu thing again.
Completely different. And the reason why being a CEO is tough. The rules change little by little.
What do you mean?
You won't be compared under the same conditions as before. Numbers that were praised before become unsatisfactory next time.
The standard keeps rising.
Right? That's why CEOs are made to fight even against their past selves.
Hearing all this, I totally got it. A MegaTech CEO is far from being a winner. They are constantly on a public execution platform.
Haha. The phrasing is strong, but structurally it's close. Capitalism is originally a highly competitive system, but now it's already global scale, real-time, numerical management.
Even Marx probably didn't think that capitalism would become such a hell, even for the business owners, right?
True. It's always been said that workers have it hard, but now managers are also in an inescapable loop of evaluation.
Quarterly earnings, beating the last record every time, the world's toughest graders. Is this really a job for humans?
Yeah, that's why there are many who burn out. Even if they succeed, they can't stop. If they fail, the evaluation changes in an instant.
Enough already. Instead of workers of the world unite, CEOs of the world unite.
Haha, but that scream actually touches the essence. Capitalism is not a mechanism to make anyone comfortable. It's a mechanism to never stop comparing and expecting.
I feel ashamed for saying I wanted to be Bill Gates.
Thinking you want to be him is natural. But on that chair, it's not a cushion, but covered in thorns.
Today's conclusion. MegaTech CEO is not a dream job. It's the job most chased by numbers in the world.
Yeah, that is the reality.
Then I will live moderately. Work moderately, invest moderately, and live moderately.
That is probably the smartest.